Hi all. This is going to be the upcoming week's market analysis. Hope you're all well, and yeah, I'm going to be going over quite a few things in this video. I think maybe it might be quite long, so um, I guess the longer the better for you guys. So let me get this market analysis done. So first of all, last week, we saw a lot of the technical analysis play out. We just didn't get, the entries that we wanted, especially on things like the euro dollar, the dollar yen, dollar Swiss, and we'll see them on the charts. They came into our zones, just didn't get any buying opportunities, unfortunately. Um, but there are obviously some more opportunities coming up. Hopefully, prices have definitely pulled back, which is great for us. So we've definitely got some immediate, I think, trading opportunities, especially on like the dollar yen. But anyway, um, before we get into it, what I also wanted to mention was the fact that I've done a members only fundamental analysis. That's not the one. 1 second. Members only fundamental course. All right. So if you go to your normal your course, and then if you've been on this page in a while, but I've updated it. So I've done a section for market analysis. Yeah. So every time this video is going to be up here. And if you miss anything in the group, so if you go to the group here and you miss anything here, I should either upload it at one or two places. If it's a market analysis video, it'll be here, and if it's just anything else that I've uploaded and we spoke about in the group, it should be here. You've got a search, so you can search keywords, etc., for what you're looking for, and here. And what I've also done is I have where is it now? Oh, 1 second. What am I doing? Right, the members fundamental analysis. I don't know why I didn't see that in the first place. So you can access the members fundamental analysis course. So if you click on that one, it's not the same one that everyone else gets. It's not the same one. It's actually a different link, and it looks the same, but with one additional thing. Right, more fundamental analysis videos. So this is everything. This is like everything that I know about fundamental analysis that is not in the fundamental analysis course. Right, everything that we speak about, all the videos that I make in the group, everything fundamentally is all here. So I do like asking you guys to ask questions, but also if if I'm not around, or if you can be bothered, which I advise you to really do, is watch these videos, study these videos, because I can pretty much guarantee you any question that you've asked is probably within this, as far as if you're talking about interest rates, inflation, and GDP, right? If it's not in here in the fundamental analysis course, right, which it should be anyway, right, it's going to be in here, right? All the nuances, everything else is going to be in these videos, and you can also search, etc. So definitely study this. This is, like I said, this is everything that I know. Yeah, this is pretty much everything I know. There's going to be other things, like, for example, I think Fitz, we were talking about the Trump trade and trade war, and why we want a cheaper currency, why Donald Trump wants a cheaper currency, and why the Federal Reserve also want a cheap currency. They're not seeing eye to eye on it at the moment. There's those types of videos that obviously, again, explain the difference, but obviously from a different angle, if you know what I mean. But everything is in here. Everything I know is in here. There's nothing more that I know that I'm not gonna, show you. So, with that being said, yeah, we had a very interesting week. Very interesting week. Again, loads of trade setups. Prices came down into the zones. Just didn't get, the entries that we wanted. Well, not on the 4 hour anyway. So, This is Trading Economics. They haven't updated their. I don't think they've updated their week, the upcoming week synopsis here. But as you can see, the headline: jobs growth surges in April, and everything is pretty much ticking over nicely. So non-farm payrolls in the US um, beat expectations massively. This was 3rd of May. So it was expected to be 181k, 263 jobs. Earnings, held steady. Forecast was 0.3, so it's even though it's red, it doesn't mean anything because we know about deviation, etc. So previous forecasted, actual was just it is what it is as far as it being held steady. The dollar is quite strong, so again, that's the reason why if you get a weaker dollar, then you would get probably more inflation. So, for an example of that would be the euro, right? This week, euro was it the euro? Pound dollar. Have I only got one sec. Right. So when was that euro? I think it was euro inflation. Bear with me, guys. 1 second. Yeah, I've got everything ticked. I think there was some euro. I'm sure there was some euro inflation numbers. Let me go to trading economics indicators. Euro area. Sorry about the banging if you can hear it, guys. The my neighbour's doing. I think their wall. Yeah. So inflation, right, for the euro area rose. Yeah. So you can really see why, and it's because the euro is cheap, right? Or it's gone cheaper, especially against the dollar, etc. So inflation can take a while to come into the system, but if you're looking at dollar strength and euro weakness or euro cheapness, then the euro should want to actually come up if we're looking at the price charts. But the problem that Europe has, even though they got inflation, is you need the economy to be ticking over as well. There's no point in having the inflation, but your GDP growth is near zero, if you know what I mean. Whereas the US is at 3.2. So yes, they've grown to 0.4, but when you compare that to the dollar, there's really no contest. So we also have, what else do we have? So just make sure that we also as well update the fundamental analysis spreadsheet, the current and the previous position, please, because we need to know if something is growing, something is shrinking, etc. So and it makes sense for this. This only gives us the numbers, but if the numbers aren't right, then we're going to be potentially on the wrong side of the market. So it's responsibility for everybody. Even if we only if I focus on the United States and someone else focuses on the United Kingdom, someone else focuses on Japanese yen, etc. But we just do what we can, and yeah, we keep this maintained, please, because this is the most important. I know we focus on the technicals, but this gives us our directional bias, and if we're not updating this and we're taking the wrong trades, can't blame me. Please don't blame me, because if the numbers aren't correct, then we're taking the wrong trades. Very, very important that we keep the previous position, and the current position up to date. So, getting into the charts now. If this is to be correct, 1 sec. Aussie still 6, Canada's number 2, United Kingdom's number 2, Swiss franc 7, New Zealand 4, Japan 8, Euro 5. Right. And also as well, just to remind you guys that yes, we have a cumulative ranking, and we also have this is our ranking now. Price, I think I saw someone basically say something along the lines of I can't remember what it was now, but the idea of this is that yes, we want to be, buying strength versus weakness. Those are the best trades. 1 versus 8, 1 versus 7, 2 versus 8, 2 versus 7, 3 versus 8, 3 versus 7, 3 versus 6, etc. When we trade, United Kingdom versus Canadian dollar, I'm not saying that you shouldn't take those trades, but what I am saying is that it's harder to read what will happen, if you know what I mean, as far as, when prices get to a level. If you've got, because you have also sentiment as well to take into account. Yes, this isn't necessarily, this doesn't take into account sentiment, it does take into account monetary policy sentiment, right? So if this was to be correct, we've got neutral hawkers versus neutral. So that potentially would give a the United Kingdom, right, an edge over Canada, even though they're both, number two. So, yes, while we do have sentiment here, again, the analogy would be, it's like betting on two even teams. Would you rather take a bet on, Liverpool versus um, Man City, right? For those of you that are in the UK, or two top teams in any, in any sports field, or would you rather take a bet on a top team versus a bottom team? It's easier money to take, a top team versus a bottom team. Yes, we might see some technical setups that we really want to take, but if you're taking 2 versus 2, then what I would say then is just lower your risk size. Don't go in at 1% or 4% or whatever it is that you normally go in for. Maybe go in at a half, right? Do a half position, because ultimately we're trying to do strength versus weakness. Yeah, we don't want we don't want to take, but it's harder to read when you're doing 2 versus 2. If that makes any sense. So the pound, for example, ended up spiking higher, right? And that was it. It was I think it was Chris. I just read the last um, messages about. I think he took a pound CAD short trade, and again, pound CAD 2 versus 2. Um, I don't even know what the setup was, but 2 versus 2 when you've got the central bank is neutral hawkish, and the neutral um, isn't necessarily the best. Also, as well on this, and I've been going on about this a little bit, but you can have and you will have the United Kingdom strengthen over the United States. Markets don't move down just because the United States is number one. Doesn't mean that the market's constantly going to move all the way down, all the way down, all the way down, all the way down. You see what I'm saying? In moments of you get pullbacks, you get breakouts, you get stop hunts, etc. Right? So even though yes, we want to be number one versus number two, most of the time, first of all, the question you got to ask yourself: is that the best trade that you can take? Right, 1 versus 2. Um, Again, no, it's not the best trade from a fundamental perspective. I'd rather take 1 versus 5. Secondly, is you will get, even though the United Kingdom is number two, if you're asking why is it that the pound is strengthening over the United States dollar, you've got to think like, objectively. You've got to not think so rigidly. You've got to think to yourself, well, at some point, if we're going, pound dollar, yeah, of course the pound, prices can go the opposite way. It's like I said, the market doesn't move all the way down. It's not going to continue to go down. You get pullbacks. You get those types of moves because you get them here. Yeah, the pound hasn't been number one. Yeah, um, ever as far as since we've done the fundamental analysis spreadsheet. Yet you get pound strength. You see what I'm saying? You get pound strength. You get pound strength. You get pound strength. Right. So don't start thinking to yourself, well, why is the pound strengthening? It happens. It's just what price does. We can't control price. People can't control price. There are manipulations going on. There are liquidity issues. You see what I'm saying, and things like that. And we'll get into this, but this was this is a beautiful capture pain candle. Yeah, a lot of people went short on non-farm payroll data, and the prices have gone the other way. Yeah, it happens. Again, a lot of traders are in pain. If you were looking to buy buy the pound, this is a fantastic setup. But again, we'll get into this from when we do the technicals. So don't be naive to think that because we're trading 1 versus 8 that, Japan can't strengthen in the meantime, or the euro can't strengthen, or the dollar can't weaken because there's profit taking going on, there's positioning going on, etc. We just look for areas, and then if those areas fail, then we just look for higher areas. Like Jamie says, we just look for a better price, to buy the asset that we want to buy if the level doesn't work out. So on to the technicals. I've been rambling on a little bit. So let's start from the beginning. So Aussie CAD, we definitely we wanted to be buyers of the CAD, and we were looking for, pullbacks. We just didn't get any. I think it probably came off the underside of this, what would be support turned resistance. You can see it here and there. Unfortunately, we just didn't get a move up to here before getting in short. So that again, the fundamental analysis spreadsheet, is keeping us on the right side. It's just these trading opportunities. Sometimes price doesn't get to where we want to, and when it does, sometimes it might not even give us an entry. But overall, you can see what is happening with price, right? If we look at the spreadsheet, if we're going forward, we'd be looking for, again, we made a new low, so that would be a supply zone, and then we'd be looking for pullbacks into this area here before looking at short trades. If that doesn't work out, we're getting short here. If it don't work out, we get short here. That's it. That's all that. That's what happens there. Obviously, the better zone is going to be the higher level. Let me pull this down a little bit. This level now lines up with the high level, probably lines up with 61.8 Fibonacci level and all that kind of stuff. So we got the confluence of other technical traders looking to get short around these levels. This high level is more fair value, and this is the better area. If we're looking at some sort of trend line break. We do have 1, 2, 3 candles, open, high, low, close, clear, of anyone looking at this kind of trend. So again, here, or here, we're expecting prices to definitely range now, because they've not only have we broken that trend line there, we've cleared that trend line there. So range in market at least, or a trend to the downside. Aussie Swiss, so this is 6 versus 7. Again, even trades, even strength or even weakness. There was an opportunity to get long earlier last week, which would have been around this zone here. Technically, I liked it. I just didn't like the pair. There's a 2 candle swing there, right there. Right. Yeah, so you got your 2 candle swing there, but that was last week. I wasn't really looking at this pair from a fundamental perspective, but it was possible to take again. 6 versus 7, you're buying the stronger of the 2, but just know that it wasn't necessarily a full position type trade. Where do we go from here? Again, you're probably looking at around lower here. I'd probably say the lows of around 0.73, but again, from a fundamental perspective, not necessarily the best pair to trade. Risk on, we've always, fundamentals, we're always looking to trade the Australian dollar. Aussie yen, again, this level here has been touched once, twice, 3 times, 4 times. If we extend this over, I wouldn't be keen on that. I'd probably be looking for some sort of stop hunt type trade. Taking out, what you need is probably a little bit of a bounce somewhere, then it goes something like that. Take out those stops and then look for some sort of buy. But for now, you'd have to wait. I think personally, I'd wait for that type of price action to come in, or if it does it around here, if you know what I mean. The 77 round number is decent for a an actual buy. Matter of fact, it's still a fresh level. It hasn't really been touched, even though it's come close to it. Yeah, the 77 round number. That's if I was to take any kind of buys, it would have to be around that round number before looking at a long trade. But anything before that, um, not really looking at. Again, the yen risk off. There would be your supply zone there, and you got another supply zone right up here. So you're looking at taking short trades, risk off. Those would be your zones. Aussie versus New Zealand. New Zealand slipped to fourth place, and but I still think obviously 4 versus 6. I'd rather be getting in than buying 4. So we're looking for some sort of pullback into, again, this supply zone. We've got a trend line break. We should see the market, after massive trending market, if prices start to drift up anywhere around here, it's looking for a short trade. I do like this setup. If not, then if we get a move lower, move back, then this becomes a supply zone. This will be the last bullish candle before prices make new lows, or whatever makes the last bullish candle before price make a new low. Right, Aussie dollar got a large wide support zone. When we get something like this, what we'd have to do is probably go all the way back to see if there's any levels of support and resistance within that larger demand zone. So you'll put something maybe right there. If you were looking to buy, that is, then you've got this one right here. But we're looking at sells. We're looking at sell trades. So at the moment, if we can get something that goes like this, we're looking for the upside, but obviously the weakness. If we get something like that, and then a pullback into any of these levels, so there, or the higher zone there, that would be what we'd be looking for. And I'm going to just drag this all the way down here just for now, just so we can see where these supply zones are. So supply there. If that obviously creates a new low, then that would become supply. We'd be waiting for prices to come back to this area here. This is also looks a bit like a level CPR. So you've got traders that trade levels, bounce, they trade the level, bounce, and then they get caught in their position, come back up. Where are they going to exit? Where they're going to look to exit anyway, around here before, and then we look to get short or anywhere around here. CAD Swiss, we are waiting for a bit of weakness in the CAD. Oil's been weakening apparently, so that's what we're looking at here. Right there, looking at some long trades from a value perspective. The VR tool, yeah, that's around fair value, nice decent zone. And then we just do the rest as far as support and resistance, horizontal, anything diagonal around that area. That's a bit of a wide zone, but you can see it where it's come on, yeah. But anyways, you know what I mean. So you got support, bit of resistance, support, resistance. So wide zone, 75 round number, anywhere around here within these two demand zones is, I think, is going to be a really good buy. And this is what I'm going to be looking to buy. And that's 2 at the moment. That's 2 versus 6. So brilliant trades there. What we're looking at, yeah. So Canadian dollar, yen, waiting for price to come down here as well before looking at some long trades again. Just remember that risk has to be on. Yeah, and if you're in doubt, the best thing to do is just to reduce your size. Reduce your size, and you can always add in. Yeah. So I'm looking for prices to really kind of come further down here. This is a nice retracement CPR. If you can come down into this 82 round number, anywhere around here, I'm looking to get long as well. So some good setups coming. CAD, Singapore, Swiss yen, I'll give that a miss. Dollar currency. So again, we did get a bounce off of this, and this isn't the Dow Jones Dollar Index. It's just the dollar, the DXY. We did get prices come down into this demand zone, shoot up. Now, if we can get back down, if the dollar starts to, and I guess I'll talk about the dollar for now. Look at the overall picture as far as what's been happening. We were in a range for a little bit, and this was pretty, the more immediate range, and then prices have kind of broken out, come back, and then again, weakness isn't bad. It just pushes prices to where we want to be, buyers. The dollar is still the number one currency, but prices, can do what they want. So this is, at the moment, I think this is capturing traders to the other side, but it's also drawing in traders to the short side. And we'll see that on some the euro dollar and the pound dollar as well, and the other dollar trades as well, like for example dollar yen, and it's capturing traders. So I don't mind this type of price action. I couldn't get involved in this as far as the dollar strength there. So if the dollar starts to weaken, that just again means we can be buyers of the dollar overall. Everything, the news, the major news is out the way. Non-farms, GDP, everything is looking good, if you know what I mean, for the dollar. So don't panic, don't worry about what price is doing. We're just looking to get long, and if we get any kind of bullish price action anywhere really on the dollar currency, especially if we get them in demand zones. But if we get them, we look for this to start to turn up on our trading time frame. If you see dollar strength across the board, that just adds to the matter of fact, let me go back. It goes back. That adds to our trade, if you know what I mean, because we know that we've got the dollar strength across the board. So what's going on here? Yeah, well, the point I wanted to make as well. Here we go. The point I also wanted to make was with regards to value ranges was, remember that we are buying, potentially overall at, the dollar at highs. So at some point we do want to see some sort of pullback into demand zones. So we're not buying overall dollar currency at, its high, if you know what I mean. Yeah, spatial awareness, understanding where we are overall dollar strength. We're buying dollar at highs, so a pullback isn't a bad thing at all. And short-term dollar weakness isn't bad at all, because, like I said, it just drives prices to where we want to, be bargain hunters. Euro Australia, you can see pretty much 5 versus 6 is playing out in itself. Again, if you really want to be a buyer of the euro, then you'd be waiting for prices to really kind of pull back into this demand zone before looking at long trades. Looking at short trades, again, you'd be probably waiting for any, I would say, probably a bit higher up, to be fair, because this level's been touched several times. But I would probably say the higher level is 1.60 or 1.61 would be probably the better area to look for short trades if you're looking to buy the Australian dollar. Euro CAD, this is just a mess, really. I'm not really looking to get involved in this currency pair, not right now. From a supply and demand perspective, again, you'd be looking for anything above the fresher zone. If you get some CAD weakness, and CAD is still number 2 when we're up here, get short. Euro Swiss franc. We did have a level where we had, it's a level, but we had an area, 1, 2, 3 candlesticks, open, high, low, close. We just, as far as the demand zone is concerned, that would have been demand. We did get a bit of a close below it. So again, you would probably expect prices to, enter into some sort of range, especially after this, 2-3 week of, no pullback trend, being to the upside, euro being stronger than the Swiss franc, even though it's just maybe just a risk, on risk has been on. So if risk is on, then you definitely want to be buying a euro over the Swiss franc. But as a pair, I don't really like the idea of buying the euro, and that's just me, by the way. It's just, I'm not saying because I don't like buying a euro that you shouldn't necessarily buy the euro. If the euro starts to get to number 3 or even 4, yeah, then I'm buying a euro, but as it stays at 5, 5 versus 7 is still, I guess, a decent type of trade, but I'm just kind of maybe staying away because of euro sentiment and the euro election. So I've got that in my mind when it comes to buying the euro. British pound. Yep. So we're seeing again fundamental analysis play. I ended up taking profit at this level here, so a nice trade. In fact, it wasn't a 3. It was, I think my original stop was maybe about 5 pips above this. So it would have been 3.4. I think it was like 3.9 or something like that. It was around here. With the euro pound, you don't really need a wide stop at all. I wouldn't say a wide stop. I would say more the pips aren't. Was it 5 or was it maybe I did about 8 pips or something like that? Maybe it was about 42 or something like that. Something along those lines. Anyway, but that was the risk reward. It was something like a 3-1. Yeah, this looks more like it. So the second position ended up going for a nice 3-1 trade. Not sure if anyone else got into this trade as well. There was opportunities. Again, I haven't really mentioned it, but you did have. I didn't get into this one. I got into a different. I got in it on a different entry. My entry was around here. This 0.8643, but there was an opportunity to get in on the volume indicator. You had the RSI at 97, so that was an extreme, and then you had a volume indicator. So on this candlestick here, you could have got an even better risk reward at the close of the day. That would have been that. Again, stop on the euro pound, maybe about 5 to 10 pips above. So it would have been something like this. So that's 25. So let's just say it was like 33 pips. Oh, what did I do? 33. Yeah, so there would have been your risk reward closer to maybe a 4-1, type trade. I ended up getting on an intraday candle, so my risk reward was a bit low, but trade played out nicely. Textbook type of trade again, and we'll go over, and I'm going to go over in another video, capture pain relief. Otherwise, this video will be way too long. So this was a nice capture pain relief type setup on the daily, and it just worked out. And these are the patterns that we need to see. But again, I'll go over CPR in maybe later on this weekend, or if not, maybe Monday. Do a video on CPRs again. Euro yen, again, my analysis, I was looking at this area here, but as we can see, risk for the euro, it seems like the yen is strengthening against the euro. Risk off is coming into play. Again, the only thing we can do is really look for supply zones. If prices go lower, wait for a pullback into that would be where the supply zone is. If not, if prices come back up to here, then you're looking at shorting. And again, the only reason why I'm shorting the euro 8 versus 5 would simply be because of the Euro elections, and the Euro elections don't come around every year. They're quite a rare event. So with that, there's going to be some risk off coming into play. A lot of uncertainty. Euro New Zealand. I'm actually still in this trade. My stop is still above here. This is a break-even trade. Prices have pulled back. 4 versus 5. I think Euro is still 5. Yeah, 4 versus 5. It was when we took this trade. It was the New Zealand was I think it was like 2 or 3 versus 5. So it was a decent trade. Things obviously change. So we've had a bit of Euro strength for some New Zealand weakness. New Zealand central bank is dovish in their statement, but hopefully we can get a bit of a pullback to at least the 50% level. That would represent a nice, a decent trade, I think. We took this on the 12-hour. So this was the entry. Stop was around, I think, about 10, 15 pips above that level. So 64, I think it was about 10 pips I did. So 74. Let's just say 75. So that was the risk reward. We ended up coming down to a maximum of about 2.7 to 1. But I think the 50% level represents a decent risk reward on the second position. Here, obviously, if the euro starts to weaken, right, and if prices are coming down and I see the euro weakening, going from position 5 to maybe position 6 and position 7, then I will probably end up holding this trade as long as possible. And also as well, if the New Zealand dollar starts to strengthen, so still in this trade, and just waiting for I can't lose on this trade at all. So just waiting for the I guess the fundamentals to play out. Euro dollar, right? So euro dollar, our analysis on here from previous videos this week was that this area here was a CPR zone. Yeah, this box, this purple box here, is a CPR zone. Anyone who's pretty much taken this trade here long is now going to be captured in their position, especially because of non-farms on Wednesday. No, was it FOMC on Wednesday? So what we're waiting for now, if we're looking at it from a daily zone, it hasn't really put in a daily zone per se. This is still the overall zone, and again, we could draw it from probably the breakout of the wick, but as we do draw, I don't want to confuse anybody, but if the better zone would be up to the highs, yeah, the better place would be up to the highs. But if you take it before that, if you see an entry before that, it's okay, because you have resistance there, intraday resistance, and again with CPR zones, you don't always get the daily supply and demand zones in alignment. I obviously trade them with daily supply and demand, but you don't have to. So if you take a trade around here, then definitely be my guest, if you know what I mean, because I do like this as a setup. What this has also created is another CPR zone, and it's here, and I'll go into it a little bit just in this pair. Right, CPR, and it's because, again, on Friday, yesterday, we had and I like these types of trades, where we had good news for the dollar, but then prices started to go the other way. So if we're looking at this maybe on an hourly time frame, you can see how many people, or even on a 15-minute time frame, news came out right here, 1:30. Everyone looks like they're getting short with this candle wick. Oh, great news, great news, great news. Also, as well, I mentioned this, is why are you shorting at the lows? Prices are here. I don't care how good news is. You know, this doesn't represent value. Look at where you're buying the dollars. It's literally, you should be buying a dollar up here, which is what we're intending to do. Dollars moves all the way down here, yeah, and then people are going to start to get short based off of, you know, new sentiment. Now, if everybody is trying to go short, then where are their stop losses? Stop losses are, you know, above. And why is that important? Because if there's no if there's not enough liquidity to the downside, everyone can't get short at the same time. Financial institutions are going to basically take everybody out, yeah, to the upside, right? This is not a case of the euro strengthening. This is not necessarily my word, but this is how I understand the markets. And I've seen this many times over the years where everyone will get short on good news, and then all of a sudden it goes the other way. Yeah, it goes the other way. Again, this for me is fine, because all I'm looking to do now is just short the euro from here, because nothing's changed from macroeconomics perspective, especially when you get good news. Yeah, for the dollar, it's just like I said, liquidity issues, stop hunting, market manipulation going on. Yeah, there's no positive news coming out of Europe, not at all. And even if it's positive news, economically, they're still, you know, way behind the dollar. So don't follow price. This is also drawing in traders to go long. You know, who say, oh, you know, fundamentals don't work enough, and they might make some money. Good on them. But we're looking at overall prices. If prices can come up to anywhere around here, anywhere around this level, you know, look for to establish short positions, right, around here. And you don't necessarily have to go all in, especially on the lower time frames. Maybe if your overall position is 1%, maybe, you know, scaling. So you could do like a quarter position here, yeah, and see if what happens. If it stops you out, do another quarter position or another half position, etc. Right? Don't have to always go all in, especially like I said, because lower time frame trading. I know, you know, you guys. I don't really like talking about lower time frame trading, but um, the higher the time frame you enter is, the less likely you are to, you know, get stopped out. You have to trade off, or the trade off with lower time frame trading is that you will get better risk reward, but you will lose a lot more. Yeah. So if you're okay with losing a bit more on lower time frames and maybe being stopped out, etc., but for bigger risk reward, and obviously that plays into, you know, risk reward ratios, as far as if you're always going for 3 to 1s, then all you need to win is 25% to break even and not lose money. So you might be getting 4 or 5 to 1s on an hourly time frame chart, but maybe your win rate might be a bit lower, if you know what I mean. But if you don't mind, you know, losing a couple more trades in order to get the bigger risk reward, then, you know, be my guest. Everyone's, you know, different. So, you know, going back to this trade, pretty much everyone above here or everyone around this zone is caught. We know that for a fact, because loads of people trade FOMC statements, and then, you know, prices would have drawn them in, and then, you know, to the downside. So anyone who's bought here, yeah, is going to do what? Exit around here, trouble areas. They bought here, they got sell to exit. These guys are caught in their positions. If they bought here, then they have to sell to exit, and they're going to be new traders looking at levels of support and resistance, getting in at these levels here. So this is what you would call a textbook trade. This is an absolute textbook trade. This level here as well, textbook trade. But we wouldn't be taking this simply because you'd be buying the euro. And at the moment, it's not the trade to buy, but or the pair to buy. But anyway, going back to the rest of them, pound, you're seeing the pound strength over the Australian dollar. I do want to get in short around here if it pulls back this far anyway. Not really looking to short, but if you are, then you'd be looking at maybe that zone there as a level of supply. And isn't it great just seeing the fundamentals play out when you see 2 versus, you know, 6, and you're seeing price do what, you know, it does. And it's been 2 versus 6 for a while. We just haven't had an entry. We have to be patient, pull back, and then prices, you know, we get our trades. pound CAD, 2 versus 2. I guess, you know, if you did want to short the trade, then this would be the area to short. Again, keep in mind that it's touched it once, twice, several times before falling away, so it's not necessarily the freshest level. There's no really hard in, hard out price movement, but we could see obviously a ranging market, you know, from this point, especially because you've had this, you know, higher move, but it's not necessarily the best. Sorry, the best trade to best currency to take. We've got a bit of demand right here, right this level here. Demand. So on a lower time frame, we are. This is what pretty much it looks like, where you've got not necessarily hard in, but you've got this nice hard out movement. So if you did get prices come down here, yeah, that would be a decent buy. I'm saying necessarily the best buy, but a decent buy. There'd be a lot of traders looking at support at this level here, so you'd want to definitely take it from a first touch of that. If you were looking to buy this, you know, a lot of traders probably would have been looking at trying to get short here. It doesn't really fake out anybody, so in second thoughts, nah, I wouldn't necessarily risk that, because if it kind of did something like this and drew in some traders to the downside and then went, you know, higher, that would be better. This is just standard level, doesn't really fake anybody out. So nah. Second thoughts, I mean, it's a demand zone for sure, but I guess it could still be taken on that. But from a CPR perspective, nah, I think I'd just discount the CPR. I do like the British pound. I do like this. Let me just clean this up a little bit. 1, 2. Get rid of these arrows for now. So, got a demand zone, so high, pull back, high. If you go down into maybe a 4-hour time frame, you can start to see where support and resistance was. Yeah, support, resistance, support, resistance. Zoom across, so there, there. And then support starts to look like it's working. You get this candlestick here where it goes lower and then pulls back. So you can see where breakout traders who would have been trading breakouts of levels, that being the most immediate level, and you can probably see it maybe clearer on the 30-minute. Yeah, you can see it here, support. Then you've got a bit of resistance there. So breakout traders getting in short, pullback, they're getting short here, right? There's another short trade, and then it just goes higher. So anywhere from around it's 145 to level is where we're looking to get long. I do like that. I do like that level. If it goes up a bit more, you know, and then comes back down, even better. But as for now, it's a decent trade. British pound, New Zealand. You can start to see obviously the pound strengthening against the New Zealand dollar. So it's 2 versus 4 at the moment. So if you are looking to buy the pound, hold on, what am I doing? Here we go. There you are, and then there's the next level. There we are. So you'll be looking for pullbacks into, you know, these areas here. So either here or here. Yeah. Moving forward, capture pain again. The British pound strengthening on who knows what reason, or the dollar weakening on who knows what reasons. I think there might have been some sentiment. I think maybe there was some speeches from some Federal Reserve people talking about rate cuts or rate hikes. But nevertheless, I think that level there is a decent level. We're right in it right now. So think I like this higher level, but anywhere around this 1.32 level, I'll be looking at potential shorts. Again, 1 versus 2. So if you are entering, just lower your position size, yeah, to a half or a quarter. I still like the dollar as a stronger currency. You don't necessarily have to take this trade. And again, I'll still be thinking about this, um, in real time. But 1 versus 2 doesn't represent the best trading opportunity. But um, if the level is okay, and this level is, I guess, it's all right. It's not necessarily fantastic. It's a level of support and resistance I don't think we've really got. Maybe we have to go down into a lower time frame to kind of see this. Blank. Right. CPR, and I would hazard a guess that this is probably level here. Let's go down into the minds of these guys. The minds of these guys. So, all right. So you have an immediate move down. Yeah. So everybody's bias, I guess, is to the downside. You know, for now anyway. If this is all you saw, get a bit of a level, get a bit of a pullback. You get traders looking at trying to get long, and then you get the fall away. Now, there are definitely traders caught in this position, because you would have had move up, move down, move higher, and you get the price action right there on the 240. Then you get move up, and then it falls away. So, yep, CPR, but from a location perspective, I would probably prefer this level here, because if you look at, for example, this kind of CPR, you know there are traders still caught in their positions. Look at that move there, and then the fall away. So if we do get up to this level, then that's a clearer one. Yes, there are traders, caught in, their positions, around this 1.32 level. But for me, it's not as clear, because it's kind of like mid-range, mid-level. I'd have to know really what was going on here. We can kind of search for third, fourth. So let's say, for example, let's do this now. Matter of fact, 3rd, 4th April. What happened around there? What happened around that date? Because if it's a news event that caught people off guard, then that would be some nice confluence. So April 2nd to the 4th. Let's see, apply settings. So we had Aussie, pound, non-farms was way below on the 3rd. So this was the 3rd. So maybe on the 4th, maybe it might have caught some traders out. Traders probably buying the pound, because the dollar on the 3rd had some disappointing news. The pound didn't necessarily have the greatest news either, but disappointing. So 4th, 5th, and then average hourly earnings. Non-farm came out okay. That came out alright. I think it's a decent CPR zone, to be fair. So potential shorts right now is 1.32. If you see something, maybe put a quarter position. I would probably say this is worth. Don't get caught up in understanding that the price action is going into a level. It looks very scary, but don't worry about that. This is the kind of price action that you'd like to see into a level, because there should be some sort of profit taking. New traders getting in at level. So if it comes around this one just above, a bit higher into this 1.32, and we get some 2 candle swings, or we get a an outside candle. Again, you don't have to take this trade. This is British pound versus New Zealand dollar, New Zealand dollar, US dollar, 1 versus 2. If you are going to get in, I would recommend only a really small position on this one, 1 versus 2. There are better trades out there, put it that way. There are definitely better trades out there. Dollar, New Zealand dollar, Canadian dollar. We got, we want to buy the Canadian dollar at the moment. It's 2 versus 4, so you're looking for some sort of pullback, or you're looking for a new low and then a pullback into this level. What else have we got? New Zealand Swiss. Again, it's probably a buy, but you'd be looking for a fresher level of demand. This level touched once, twice, 3 times. Probably due for a breakdown. Getting long at this fresher area of demand. New Zealand yen. I was in this trade. I'm still in this trade. This is a break-even trade now. So if prices do start to spike down, then it's only break-even. But I think again, if we do get moved down into just maybe slightly lower around this fair value, that's decent. I think either way, the New Zealand dollar's a buy over the Japanese yen. New Zealand yen. So we did get a bit of a reaction here, but really no entry. There, well, risk reward entry anyway. I didn't see a risk reward entry. I would probably say with the New Zealand dollar weakening, this may be a decent level to try and get short as well. If not, then again, it's probably going to be the one higher here. So we got 1 versus 4, which is a decent trade. Dollar CAD, again 1 versus 2. This move, this fresher demand zone, this 1.335 level, I think is still decent. Go down to a lower time frame. Yeah, like this. So you've got a level, again, another CPR zone, right, where you have resistance. Prices start to come down, and then all of a sudden, boom, to the upside. You've got definitely these traders looking at shorting, and then all of a sudden now it does the opposite. So this whole level here, I would say probably from there to there is where we want to get potential long, but again, this is 1 versus 2, so just reduce your risk size. You can see these guys at the top, because if you would have got short anywhere around here, you would have been placing your stop losses around here, and these guys probably would have got out first at the top of you, placing your stop losses around the highs of the market. So there would have been stop losses. Let me just stop losses there, and there would have been stop losses probably around, where is it, here as well. Oh Lord, you think you get what I mean? Anyway, there were stop losses probably anywhere around this area here, so you can see where it's just kind of touched the top of that CPR zone and gone in the other direction, and that would have been really the top of this demand zone, which would have been here and here. So it fits into the demand zone, fits into the I think I can't believe I missed this one. Why did I miss this 2 candle swing? It's actually a nice setup. Anyway, can't get them all, but yep, this was a very nice setup, 2 candle swing. I don't know why I wasn't aware of this. Anyways, Let's look at dollar Swiss. Yep, so dollar Swiss. We have the demand zone that I was looking to get long in. Again, we just didn't get the entry price. Spiked in, spiked out. Not buying that. But what I will do is look for another opportunity to get in here if we can get one. And especially with this being again it was a FOMC, so a lot of traders would have been looking at getting short at this level. Looks like it's going lower and then it just explodes to the upside. So this is a nice CPR zone. 1 versus 7. As long as risk is on, this is a buy. This is definitely a buy. CPR. Yeah. So anywhere around here, yeah, even from the top of this demand zone. But if it can come down, just a bit further to the upside, and it represents good risk reward, get involved. I'll be looking to 4 hour to get involved in this. So yeah, I like this. And again, if that doesn't work out, the next one to get involved in is going to be down here. Dollar Chinese yuan, right? Dollar yen. We are into the zone. So again, if we go down maybe into a 1 hour time frame chart, exactly the same setup as the Swiss franc. We've got a level 1, 2, breakout traders in. Everyone looks to get short now, get long. And you can see how this probably looks maybe on a 15-minute chart. It looks even worse. So I think these original lot was looking to exit here. I think if you are trading 15 minutes, I don't necessarily recommend it, but you have to understand that entries are going to be totally different. You're going to have to maybe scale in on lower time frames, but I do like this as a setup, probably on the hourly, looking to get long at any point if I see some sort of entry around here. If not, there is slightly lower level here of demand, fresher area of demand around this 111 round number. So anywhere around here, if that one doesn't work out, we're still in that demand zone. So this is probably decent trade from the market open, right? And again, we have to look towards what's coming up in the coming weeks. So this week, let's look at what's going on this week. Next week, right? Retail sales, New Zealand. Oh, okay, so we're quite light on dollar news. Fed Chair Powell speaks, PPI, dollar CPI. So maybe that's going to be the one on Friday, but definitely look for long trades regardless on this yen. I don't think there's any yen news or any major yen news anyway. Nope. Something to be aware of as well is just China, right? The China news, because China is the world's economic engine. So, as it being the world's economic engine, if China starts to slow down, then you've got the global slowdown and potential risk off environment. So China will set the tone for risk on and risk off. As long as it's within the deviation, then it's fine. They just still look for buy trades on the dollar. Right, so again, don't be scared of this type of candle. In fact, let me just see if we got any volume indicator now. But we are heading down into the RSI as well, so we could see a daily entry, and if we get a volume indicator as well, that would be decent trade on maybe the next day or two. Candlesticks, Dow Jones Dollar Index. Can I skip that? Yeah, so we're just looking for buy trades. You got a nice area right here. You got diagonal support, some demand. So if prices start to come down slightly, then start to move up. And again, for your dollar trades, just look for some dollar strength. Yeah, if you're taking a trade, look for some confidence. So if this starts to close bullish, yeah, and then you see the dollar yen start to close bullish, yeah, on your trading time frame, like the 4 hour, then you know you've got some dollar strength coming into the market, yeah, and it kind of adds to the trade. US dollar, Singapore, and then back to the beginning again. Yes, so bit of a long one, but worth it. So yeah, guys, I hope you have a great weekend, and I guess I'll see you guys on Monday. So take care.